Jefferies International Chief Economist. He is David Owen, and he joins us this morning. So welcome. Thanks for coming.
Yes,
so what did you make of the budget?
Well, looking at the big picture, there was nothing in it which changes things really from the pre-budget report. If one goes back to December, the Chancellor then was unveiling a plan which suggested they were going to tighten fiscal policy by 5.9% of GDP over the next few years up until 2014-15. Again, yesterday in the budget, the same tightening was put into play. The starting point is slightly better than they were thinking, so the budget deficit actually comes down slightly further. But it's all a question of trust. Do we actually believe they can tighten by this much? Again, the budget was slightly light of detail, so I think the markets will be rightly sceptical of their ability to actually deliver the plans.
How about the voters? Do you think that did it Labour any good?
No, not really. I mean, again, don't have much room for manoeuvre. I mean, the fiscal position in the UK is so poor. Obviously, if they had engineered votes by, or tried to engineer votes by cutting taxes, whatever, they'd been rightly slammed in the press. So, at the end of the day, they couldn't really do very much.
They did do a few things, though, didn't they? There were a few surprises. There was the stamp duty holiday.
Yeah, all around the edges, though, I'd argue.
Is that something that could, that stamp duty holiday, is that something that could actually generate some movement in the housing market?
Well, the average price of a house is close on that 250,000 limit. At the end of the day, at some point, mortgage rates will go up, and I think for a first-time buyer, we're still talking about an awful expensive housing market. The house price-to-income ratio in the UK is still very high, so I don't think it's going to really do an awful lot to get the market going.
Now, are Darling's growth rates, his growth targets for the economy, realistic?
Absolutely not. They've squared the circle by assuming that consumption grows very strongly. They've also assumed that import growth will be very, very sluggish. But their longer-term projections are clearly ludicrous. They're very much on the high side, so they're not plausible.
Now, they talked also about requiring banks to lend a certain amount of money. I mean, what do you make of this practice? I mean, can you really force banks to lend? You
can't really force banks to lend, but obviously it is an issue. Now they've paused in quantitative easing. Will we actually see a rapid contraction underway in the bank's overall balance sheet? At the end of the day, quantitative easing was pumping deposits back into the banking sector. And now we've gone on pause with quantitative easing. There is an argument that the money supply will actually start contracting, and that may restrict the flow of bank lending to the real wider economy, including corporates, smaller companies, medium-sized companies, and also households. Can you force banks to lend? They haven't really achieved it yet.
No.
I don't really think they can.
OK. Now, what's the outlook for gilts, then?
Well, it's going to be a very volatile period. I mean, we're still bullish about the market generally. We still think that the bank rate's on hold at 0.5%. But one thing in the budget was the issuance programme for next fiscal year. There's more gilts being issued than perhaps we would have assumed, given the downgrade to their sort of borrowing numbers. But at the end of the day, inflation, I don't think is a problem. Obviously, we've got other issues in Europe and the Eurosystem with Greece, Portugal, et al. So the market may be sort of following its lead from that. OK. Who's going to be a better steward of the economy, Labour or the Conservatives? That's a difficult question to answer. At the end of the day, we haven't seen any plans really from the Tories either. Ourselves, but also the Institute of Fiscal Studies, argue that at the end of the day, there isn't a huge amount of difference in the fiscal plans about what George Osborne suggested and Alistair Darling. If the Conservatives are elected, they'll tighten fiscal policy by maybe another 1 percentage point of GDP over the next 5 years. Again, in the big picture, not a great deal. But they're proposing to do it a little more quickly. Do it slightly quicker, yeah. But again, will they actually be able to deliver as fast as they think? It's going to be very difficult for any government coming in to tighten fiscal policy in the UK that rapidly. It is going to, I think, going to be spread over. The pains have to be spread over 3 to 4 years. Now, are you concerned about Britain having its debt rating cut? Not particularly, no. I mean, one thing to bear in mind as well about the gilt market, the average level of maturity is actually very high. It's 13 years, whereas for many markets, our international bond market competitors, they're sort of, 6 years or under. So the average maturity of debt's very high as well. So, am I particularly concerned? No, I'm not. And you can have a situation as well when the ratings cut, as in Japan, and bond yields fall to, in Japan, they're sort of sub 1.5%. It's probably not such an issue as people think. What's your forecast for growth here in the UK? Growth in the UK this year around about 1%. Okay. Growth next year maybe around 2%. I mean, I'm more optimistic on the UK than I am about the Eurosystem in terms of growth. But neither region is going to see particularly strong growth. OK. David Owen, Chief European Financial Economist for Jefferies. Thanks so much for joining us.